All right, folks, so for today's video, we're going to be going over a simplified scalping strategy that can be used on a 1 minute or 5 minute time frame. It is ideal for beginners using only one indicator, which in this particular session allows us to capitalize just under $4,000 in profit. Now, as we typically do, we're going to share with you our live trading footage so that way you can see our entries, closing results. But more importantly, we're going to break down the criteria that we look for in terms of added confluences to confirm our buys and sells for more accurate entries. Whether you're an intraday trader, a swing trader, or a scalper, by keeping things simple can help you make profits in these markets. And in this video, we're going to show you how. If you enjoyed today's video and gained value, like and subscribe. With that said, let's hop on the charts and get started. I'm using the replay feature on TradingView, so unfortunately I cannot use the 1 minute time frame. As you can see, when you pop this up, it'll say data point unavailable for the 1 minute time frame. But like I said, this strategy can be used on the 1 minute or 5 minute time frame. So we'll just stick to the 5 minute time frame for today's tutorial. And the point of interest that we're going to be focusing on for today's strategy were for a couple of buys between 27.03 and 27.02 with a take profit target of 100 pips at 27.12. Now, most scalpers tend to have lower target ranges of maybe 80, 70 pips or lower, but obviously that depends on your strategy and trading style. But in this particular case, like I said, we targeted a couple of buys with take profit targets at 27.12. And there are three major reasons, or I should say three confluences we looked for that further validated from these entries, most likely price is going to go in our favor. Remember, as a trader, when you're looking for entries, but actually I should say before you even take a trade, you need to understand why you're entering for that buy or for that sell. If you can't answer that question, then you shouldn't be taking the trade in the first place. And in this case, we had three main reasons supporting our buy entry. The first confirmation was simple, right? When we look at the structure, we can see prices going up, right? There's no doubt about it. Prices create higher highs and higher lows. So in terms of following the trend, if we're in a buyer's market, then we should only be looking for buy trades. But what else do we see, right? What else do we see that can further validate our bias? Well, if we look here to the left, we have an area of resistance, right? That if we were to stretch out, this is a classic example of a break and retest. This is something we talked about in our market structure video, where you have, in this case, a level of resistance that served as resistance here and here until we had the breakout, and then price returned to the scene of the crime, retesting what was resistance, now serving as support. And what do we know about support and resistances? We sell at levels of resistance, we buy at levels of support. So confirmation number one, we have bullish structure. Confirmation number two, we had a break and retest from a previous resistance, now serving as support. And then confirmation number three comes from the one indicator. Like I mentioned earlier, we only use one indicator for this strategy, and that is the RSI. Now, you could argue that at our point of entry, the RSI is oversold, so this could be a potential buy opportunity, but I don't like to use the RSI in this manner. Instead, I like to use the RSI to identify divergencies, where in this case, we have a perfect example of a bullish divergence. When we look at the chart, we have a higher low and another high low. But in that same region, the RSI is creating lower lows and lower lows. So when you combine a bullish divergence with the fact that we're reacting off of a level of support as a scalper, this is more than enough to validate that this is an opportune area for potential buys. Now, there's one other confluence. I know I said that there were three confluences. This is more of a bonus confluence that you could use for all of your entries, and that is the Fibonacci retracement. So if we were to drag this from the start of the impulse move to the top, we can see how our support line is complemented by the golden pocket area of the Fibonacci retracement. Whenever you have impulse moves to the up or downside, the Fibonacci is a great tool that you can use to help better predict how far markets can retrace to before continuing in its original trajectory. Here we had an impulse move to the upside, and then we start to see price come down. We've already established that this was a level of prior resistance now serving as support, but when we pull up the fib and we can see that the golden pocket is complemented by that level of support, this is a key area we want to be mindful of. And that's exactly why we took these trades. As you can see from the footage, and like I mentioned earlier, we have a take profit target at 27.12. Why did we target that specific number? Because if we look back, besides this peak, we really don't have much structure to go by for our target. So we have to look at higher timeframes to see where price could potentially hit next. So if we look at the 1 hour, we can see a peak from the prior month where we have a level of resistance and support at that 27.12 target, which is why we set our take profit targets in this region. So as the trade played out, price hit our take profit target and beyond, closing both of our trades at 100 pips with just under $4,000 in profit. So like I said earlier, folks, keep your trading simple. It doesn't have to be overcomplicated as long as you don't make it. Everything we've gone over today are basic beginner trading level concepts. We identified that the structure was bullish. That was our first confluence. Our second confluence was identifying the break and retest from the prior resistance, now retesting as support. Then we used one indicator where we identified a bullish divergence. And then we also threw in a bonus using the Fibonacci retracement to identify that our point of interest was also complemented by the golden pocket of that Fibonacci retracement tool. Whenever you have multiple confluences or confirmations that complement your buy or sell entries, this increases the probability that that trade will most likely close in your favor. Remember, before you take the trade, ask yourself why you're entering that trade. If you can't answer it, don't take the trade. And if you can, and you have multiple confluences confirming your reasons, take action, take the trade. This is one of the many concepts that I teach within our trading group, alongside with dedicated modules on my own personal strategies on how I trade gold, as I shared with you today, allowing beginners and struggling traders to make money as they are learning and improving on their trading skills. So if you want to learn more about our trading group and our VIP trading room, you can visit our website or click the links down below in the video description.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.